Good day, ladies and gentlemen. A happy new year to you. So, this is the first day of January in 2025. So, we thank God for actually making it to this wonderful year. Okay, so this is going to be a great year. I can feel it. All right. So, basically, in this video, I just want to teach you how to actually grow a small account without blowing it. Okay, so this video is going to be a short one. So, just stick with me. It's just one particular point that I want to give you. A lot of persons overlook this particular point, and it's one of the key reasons why you actually blow your account. Okay, and that has to do with you varying your lot size inconsistently. Okay, you vary your lot size. The thing is, most of you that have blown accounts, okay, you don't do an analysis of the accounts that you have blown. Okay, you don't try to understand what played out. You're just emotional, you get angry, you probably delete your MT5 or MT4, you delete your broker app, as I usually do back in the days when I blow an account. Okay, so I understand these things. So instead of getting emotional, you can check. If you check, you would notice one thing. There is always one thing that is there, and that thing has to do with the fact that all the trades you entered, from the start of that account till you blew it, they have different lot sizes. The lot sizes are different. Okay, so probably you won two trades, you became overconfident, then you tripled or quadrupled your lot size. And the market has a way of teaching us, important lessons that we don't want to learn. You keep, becoming a student of that lesson until you graduate from it and you learn it and you avoid it the next time. If you don't avoid it, you're still going to learn it. Okay, so that's one thing about the market. Everything you need to know, there is a consequence for it. If you don't know it, okay, you will get the consequence. If you know it and you don't do what you're supposed to do with the knowledge, you still get the consequence until you change. Okay, so that's just the major points. So this is what I would suggest for you to do. When I started doing it, it's helped me, avoid blowing an account, in a foolish manner. Okay, so what's that thing? If your account balance is $100, for example, let's say your account balance is $100. Now, this $100, you have to discipline yourself to use just one lot size. If it's 0.01 you want to use, or 0.02, based on what you would like to risk. Okay, so if your style is risking 2%, if your style is risking 1% per trade, okay, whatever it is you decide. All right, so 0.02%, sorry, 0.02 or 0.01 lot size, you stick to it until you grow this account to a certain amount, maybe $120. Okay, so when the account has gotten to, let's say, $120, that is when you can now change your lot size. Okay, probably you can double the lot size from 0.01 to 0.02. All right, so you have to, decide. You have to plan before you start trading the account. Okay, decide. Yours can be $115. Just make sure you have gotten a certain amount on top, and that amount you have gotten on top should not be such that when you now want to increase your lot size, you increase it to the point that if you lose, you'll be losing the profit you've already made, and probably to even eat into your balance. So you have to do all these calculations. All right, so stick to one lot size until you've gotten a certain amount in profit. When you've gotten a sizable amount in profit, you can then change the lot size, maybe from 0.01 to 0.02. You stick to that 0.02 for a good number of trades till it generates a certain profit. All right, that is when you can now look to increase it a bit. It has to be systematic. Okay, but those that blow accounts, just go and check their trades. Check the record. You will notice that maybe first trade was 0.01, they won that one. Next trade, overconfidence, 0.02, maybe they won that one. Next trade, they jump from 0.0 to 0.1. Can you see this? Now, by the time this 0.1 fails, it will take the profit of all those 0.01, 0.02, because 0.1 is bigger, it's a bigger lot size. Okay, 1 pip when it comes to 0.1 is $1. Okay, 0.01, 1 pip is just 10 cents, which is $0.1. Okay, whereas if it's 0.1, 1 pip is $1. So it has the potential of sweeping anything 0.01 has generated and what 0.02 has generated. Okay, so you have to be consistent with your lot size till you've gotten a certain profits, then you can now gradually increase it. All right, that's the technique. That's what will help you protect your account balance. So I felt I should just tell you this so that you can learn from it. It's one of the mistakes I myself I made when I was a beginner trader. All right, so if you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks.